Hey, welcome back to YT Finance, and today we are analyzing three articles to where the first one is titled, Could Palantir Become the Next Microsoft? So we're going to be honing in on their future growth trajectory to see if Palantir could eventually become a mega cap company like Microsoft. After that, we're going to be analyzing an article titled, Has this popular artificial intelligence AI stock gotten too expensive to buy? And clearly this is in regards to Palantir Technologies and their current share price based upon their future earnings and revenue projections. After that, we're going to conclude the article by talking about how Palantir Technologies PLTR stock recently crossed above their 20-day moving average, which is a bullish positive sign that indicates that the company's share price could go even higher in the short term. So for more videos just like this one, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with all of that being said, I say let's jump right into today's stories. Palantir Technologies PLTR stock, as you already know, has been on an absolute tear. Literally, the company's share price is up over 200% year to date. And if you didn't know, Palantir Technologies is a very divisive stock where investors and analysts have very different opinions surrounding this company. This company went public via a direct offering back in September of 2020 to where their share price skyrocketed up to $39 after a buying frenzy ensued because of the hype around this company, and then it dropped from $39 over the course of a few years down to $6 to where now their share price has rebounded up to around $19. And of course, I was advocating to buy the company below around $12, which was their fair value estimate. And now that the company's $19, let's see what this company could make of themselves in the future. First, a little background. Palantir has established their main business with the US government, and this is a very bullish thing because with their Gotham platform, they are allowed to gather intel for various military and intelligence agencies. On top of that, they also expanded into the commercial space to where their Foundry platform is being used by large commercial customers so they can make data-driven decisions for the prices of their products and services, increasing margin, and overall make more profits and revenue by utilizing Palantir's insights from their data analytics. Over the next few years, Palantir's PLTR stock is anticipated to be quite volatile. However, some investors and professionals believe it could eventually expand and evolve into a mega cap software giant like Microsoft. Well, let's actually go over the metrics and statistics to determine if this is a realistic option. Palantir was founded 20 years ago by a powerhouse team which comprises of Peter Thiel, Nathan Gettings, Joe Lonsdale, Stephen Cohen, and the current CEO, which is Alexander Karp or Alex Karp. And even before this company became a publicly traded company, it had major investors, including the CIA's venture capital arm, which was named In-Q-Tel, which was one of their earliest investors. Palantir has also been in the news throughout the years because they garnered a lot of attention due to their technology being used to track down Osama bin Laden in 2011, who was a terrorist, and they also got a lot of public attention because ICE, which is the Immigration and Customs Enforcement Agency, used their platform to track down undocumented immigrants in the United States under the Trump administration. So clearly we know that Palantir is not just a meme stock, and they really have amazing software that can do amazing things for both military purposes as well as commercial purposes. And if you didn't know, the PLTR share price trades for around $19.84, while a very bullish analyst named Daniel Ives, who is a very prominent analyst from Wedbush, believes this company could surge up to $25 per share. But now let me tell you some things that you don't know. Palantir's growth has actually been slowing over the years. For instance, in 2020, they brought in a revenue growth rate of 47%, and then the year after, in 2021, their revenue CAGR, which is their compounding annual growth rate, decreased to 41%. And this initially caused management and investors to jump on this company because management originally forecasted them to grow by a CAGR of 30% from 2020 to 2025. However, they have missed the mark in terms of revenue. For instance, their revenue percentage growth rate dropped from 41% down to 24% in just a single year from 2021 to 2022, to where management now believes their revenue will come in at only 16% for 2023. So we started at 47%, that dropped to 41%, it then dropped to 24%, and then it dropped to 16%. So we have seen a downward trajectory, even though the share price has been booming lately. So this means that their current share price is actually being disconnected and has been disconnected from their revenue growth rate, which is not a bullish sign. This is a very bearish negative sign. However, there is some good news here. We know why their revenues have been trending down, and we are anticipating a reversal in the revenue growth rate, and here's why. First, let's talk about why their revenue growth rate decreased. Well, the first reason was uneven timing from their government contracts, and we also had a lot of macroeconomic headwinds which negatively impacted their commercial segment, which caused their revenue to teeter off and trend downwards. However, we are now experiencing a reversal literally right now. For 2023, heading into 2024, and then eventually 2025, we are anticipating that their revenue growth rate will jump from 16% up to 19% and then over 20%, which is absolutely phenomenal. On top of that, we also know that their management expects acceleration to continue for their profits in the upcoming quarters. It's stayed profitable on a GAAP basis, which is a generally accepted accounting principles basis for the past 4 quarters, and it's anticipated to continue into future quarters thanks to reduced stock-based compensation expenses. However, now let's compare Palantir to Microsoft to see if Palantir can evolve into a mega cap company. Many bullish positive investors and analysts believe that Palantir's growth rate will accelerate as geopolitical tensions continue to escalate worldwide, and this would induce the US government to upgrade their data mining capabilities as well as their defensive budget. So if you are investing into Palantir or other defensive type contractors, then this could be a phenomenal opportunity for you to look into those right now. Because as geopolitical tensions increase and other types of stocks go downwards, defensive stocks and intelligence stocks such as Palantir Technologies and other defensive contractors actually go up in times of geopolitical volatility. We also know that Palantir recently launched their new artificial intelligence platform, which has been the talk of the town, and AI has a phenomenal long-term growth potential because it's a part of a gigantic market, to where President's research expects the AI space to grow at a compound annual growth rate of 19% from 2023 to 2032. And if Palantir merely keeps pace with that market, its annual revenues could surge from $2.2 billion in 2023 up to $10.5 billion by 2032. So what does this mean for their share price? Well, if Palantir is still trading at a 20 times PS ratio or 20 times their sales by then, they could cross a $200 billion market cap, which would make them a mega cap company. However, my criticism would be, no, Palantir probably will not sustain a 20 times sales multiple by then. Ideally, we would want their sales multiple to be below or around 10. That is much more digestible. But even then, this company would be worth over $100 billion, which would still be a far cry from Microsoft's market cap of $2.8 trillion. And if you remember from our last video, we talked about how Palantir could become a $1 trillion company over the next decade or two. So if a $1 trillion market cap is multiple decades away, then a $2.8 trillion market cap is even further away, considering that Palantir will also face some growth challenges over the next decade. For instance, some of their customers or former customers, such as ICE, has been internally developing their own data mining platform to replace Gotham, which is bad news for their government segment, and likewise over in their commercial segment, their Foundry platform could also struggle to keep pace with other enterprise-oriented data mining services, such as Alteryx, Splunk, and Salesforce. So to truly say that Palantir is the next Microsoft is somewhat of a far cry. Now, I'm not saying it's completely out of the question to say that Palantir is the next Microsoft. However, Palantir would need to grow exponentially from now on, and they would need to make some large acquisitions to expand their overall ecosystem to even get close to the technology giant we know as Microsoft. Luckily, Palantir does have enough cash on their balance sheet to buy multiple companies and acquire other companies, considering that they have over $3 billion worth worth of cash just sitting there. So I do believe Palantir will eventually turn into a mega cap technology giant in the future. I don't think it's very realistic to compare Palantir to companies like Microsoft. That is just completely out of the question for now. Instead, investors in Palantir Technologies PLTR stock should focus on the company's ability to accelerate their revenue growth, maintain their GAAP profitability, and hopefully lower their overall premium valuation to get this company at a good buying point. So now let's talk about what the best buying price would actually be for this company, considering that many believe that this company is too expensive to buy right now. With Palantir's amazing experience and capabilities in artificial intelligence, clearly Palantir is one of the top stock picks to buy in this overall space. But popularity comes with a cost and a premium price tag, meaning that their share price is rather high right now. So is this stock too expensive to buy? Well, considering that the PLTR share price has surged by over 200% year to date in 2023, while its financials have not even remotely grown at that same pace, this would be known as multiple expansion, and it occurs when the market is willing to pay more for a stock than it previously had, which normally is good news. However, the problem with this is that sometimes the share price can become disconnected from the company's fundamentals, and once that happens, smart investors will be hands off and just hold. They will neither buy or sell the company during this time unless the share price surges so high that they can't help but take some profits, and that's what I've been doing lately. So, with this recent increase, is Palantir too expensive to buy right now? Well, to further this point, let's compare them to a software company like Adobe. Adobe is what many software companies aspire to be once they are fully mature, and this is due to their 29% profit margin, which is one of the best in their respected software industry, which absolutely dwarfs Palantir's 13% profit margin. But what if Palantir had the same levels as Adobe in regards to their profit margin? Well, if we could duplicate Adobe's profit margins in Palantir, it would mean that Palantir would have generated $615 million worth of profits over the past 12 months with a $42 billion market cap, which would value the company at 68 times earnings. For reference, Adobe trades at only 56 times earnings, which is much cheaper and a better opportunity than Palantir. However, we do need to take Palantir's growth into consideration, considering that Palantir is growing much faster than Adobe, but even that would not save the company. The company is trading at a very high premium right now, so smart investors would just want to hold their position. There would be no reason to buy into this company more, considering we know that this company is extremely volatile and a pullback will be imminent eventually. So what does this mean for investors? Is Palantir too expensive to buy? My answer would be yes. This author says it depends, and I can agree with him. Yes, it actually does depend, but overall, in general, I would say that it's rather high right now. Palantir has become disconnected from their overall fundamentals, considering its high premium. Intelligent investors should wait for this company to pull back, unless you believe this company will surge up to $25 over the next 12 months, which is exactly what Daniel Ives believes. But Daniel Ives is not the only one who believes this. For instance, we have also seen some bullish indicators as of late for Palantir's PLTR stock, to where Palantir recently overtook their 20-day moving average, which suggests a short-term bullish trend. If you don't know, the 20-day simple moving average is a popular trading tool or an indicator which provides a look back at the stock's price over a 20-day period. And like other SMAs, if the stock price moves above that 20-day moving average, then it acts somewhat as a support. However, once it falls below the moving average, it will signal a downward trend. In the meantime, Zacks actually ranks this company as a strong buying opportunity, along with many other investors. So it really just depends on the type of investor you are. However, for me, I am just going to hold my Palantir stock until I can get in on this company at a cheaper share price, considering my relatively low average cost basis. I really don't like it when a company is disconnected from their fundamentals and their overall accounting ratios, because then I would be adding unnecessary risk to my investment. I am a long-term investor, so I really want to lower my average cost whenever possible, and I really don't want to increase my average cost when this company is trading close to their 52-week high. But even with all of this being said, I am still very bullish on Palantir Technologies. I personally own Palantir Technologies, but I refuse to invest into a company that is this disconnected from their fundamentals as of right now. So I just plan to hold this company, and even if it surges higher in the short term, which I do believe is possible considering these indicators, I will be content with my current position in this company so I don't have to take on any unnecessary risk. So I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month. And with all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.